Morning, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So hope you had a good weekend. We are entering a new week, and of course, we will also be entering a new month later in the week. And there is quite a number of developments that have happened in the markets. So we'll be looking at the key things that you're expecting for the week and also for the day. And later, we also look at some technical analysis. So welcome. I can see the US. I can see Abdi. Welcome. So let's get this started. Let's start with the economic calendar and see what you're expecting. So of course, it's the NFP week or the non-farm payrolls. So this is the week that everyone in the market will be anticipating to see the US job market report. So from early this morning, we had retail sales data coming in from Australia, which came in stronger than expected at 0.5% compared to the expectation of 0.2% and a previous reading of negative 0.8%, basically showing a very healthy Australian consumer. So today is the summer bank holiday in the UK. So all day, all the banks will be closed. They will be inactive. So we'll be expecting low trading volume for UK pairs as well as UK indices. M3 money supply year over year in the Eurozone came in at negative 0.4%, basically showing that the money supply is reducing. Private loans also weakened to 1.3% from a previous reading of 1.7%. So going on for the rest of the day, we'll be seeing a speech from German BUBA's President Nagel, and of course, the CB leading index for China, and this will be happening at 4 p.m. So clearly, a very quiet day on the economic calendar. So we are not expecting any big things to be happening. So later on in the week, we'll be having quite a number of news. And I think between Tuesday and Friday, there will be key important events affecting the US dollar as well as the US economy. So we start with RBA governor designate Bullock issuing a speech at 10:40 a.m. tomorrow. S&P Composite 20 Housing Price Index. This is at 4 p.m. And of course, the most important data point will be CB Consumer Confidence Survey at 5 p.m. tomorrow, and also the JOLT job openings. Then we skip to Wednesday, where we'll be looking at the Consumer Price Index in Australia, German preliminary CPI, Spanish flash CPI. And then as we approach the end of the day, we get the ADP non-farm payrolls, as well as a preliminary GDP for the US, preliminary GDP price index, goods trade balance, preliminary wholesale inventories, pending home sales, as well as crude oil inventories. So then on Thursday early in the morning, we look at industrial production as well as retail sales in Japan, ANZ business confidence survey for New Zealand, then Chinese manufacturing PMI as well as the non-manufacturing PMI. So as we move further down, we'll be getting inflation from the Eurozone, core CPI flash estimate at 12 p.m., as well as a CPI flash estimate. ECB monetary policy meeting accounts. This will be at 2:30 p.m. on Thursday. Before we look at the Fed's favorite measure of inflation, which is the core PCE price index data at 3:30 p.m. And of course, we also be looking at unemployment claims, personal income, as well as the index of personal spending in the US. So as we approach the end of the week, we'll be getting Japanese capital spending, as well as final manufacturing PMI. Then for China, we get Kaizen manufacturing PMI. Then for Switzerland, we get the CPI month over month, before we get to the most important data of the week, which will be the US non-farm payrolls, which are expected to come in at 169K compared to the previous reading of 187K. So we also be looking at average hourly earnings, which is the rate at which wage is growing. So previous reading was a big jump of 0.4%. So we also expect around 0.3%. So Canadian GDP will also be on focus on Friday at 3:30 p.m. And then later towards the end of the day, we look at the ISM manufacturing PMI, as well as manufacturing prices for the US. So on the earnings calendar, we are not expecting much. I believe it's just Salesforce among the key highlights. So the earnings season is almost coming to an end. So we don't have any major companies reporting earnings. For instance, you can see today we have Fabrinet, Nordson, and of course, Zoom Video Communications, which is currently estimated to report 1.06 earnings per share. So Toll Brothers are reporting on Tuesday. We have BJ's Wholesale, Canadian Solar, Dick's Sporting Goods, Lazy Boy, Lois, Macy's, Medtronic, and Urban Outfitters. Think I'm looking at the wrong one. Shouldn't be this one. Because those are the same exact companies that were reporting yesterday. I checked this area and I know the company we are expecting this week is Salesforce. So I think I'm looking at the wrong link. Apologies for this. Yeah, got the right link. Yes, this is the right table. So among the companies that will be expected to report earnings this week, today the key highlight is BYD, the Chinese EV manufacturer. Then tomorrow we have Pinduoduo, the Chinese online education company. We have HP and NIO. NIO is also a Chinese electronic vehicle manufacturer. We have Best Buy, PVH. Then on Wednesday, this is when we have the highlight earnings coming in for Salesforce. So Salesforce is expected to be on forecast this week, mainly because they are largely invested in AI, and we know that AI has been leading the stock market boom this year. So for any companies that are majorly invested in AI, we tend to see a lot of hype as well as a lot of volatility in the price action, especially before and after earnings. So we'll also be having earnings from CrowdStrike, Brown-Forman, Okta, Chevy, Five Below, and then more earnings will be streaming on Thursday, especially on, for Broadcom, which is a company that is invested in chips in the chips industry, which is has a direct angle on AI. So we have VMware, we have Lululemon, we have Dora General, UBS, Dell, CITIC, MongoDB, Hormel, we have Campbell Soup, Polestar, Sienna, and so on. So the earnings season is almost coming to an end. So that's why I'm saying that the key focus for the week will be majorly Salesforce. So now that we know all that, I think it's time that we jump right into technical analysis, try to understand some key price action patterns, especially considering that this is a slow day on the economic calendar. So we expect the markets to be respecting key technical patterns and as well as the prevailing trends that were left last week. So one key highlight is that the dollar was really strong. Need to address something here. So the dollar was really strong last week, and we got to enjoy some key level trends. So with this strong momentum upwards, it basically meant that the majors were basically losing against the dollar. So now as we enter into a new week, you can see even the candlesticks for the dollar index are basically very thin. basically indicating that there's low volatility in the market. So as we enter the London session, knowing that London banks and traders are majorly closed, then we expect low volatility. So in this case, even for the dollar index, we may be expecting a very slow day. So for pound USD, this is how we ended the week. We can see that after the market traded sideways for quite a number of weeks, eventually the pound managed to break towards the lower side, backed by a very strong dollar. So after the break, the market went back, retested the trend line, and then dropped further back downwards. And now it appears like this market is now trading within a consolidation zone. So the key levels to watch will be 1.26, 187 as the resistance. And of course, the support is the low that we saw on Friday. So 1.25, 467. So we will be expecting the market to be playing within these borders. And if there's a breach of any of these borders, then it could create a trading opportunity. So for now, I expect these to be moving sideways. And for Euro USD, it's kind of a similar story, except that the Euro USD is trading on a very major support level. So if I zoom out my chart, you'll notice there's this trend line that can be traced all the way back to around the 15th of March. Then we got here, the market bounced on the same level at 31st of May. And now along the same trend line, you can see that the euro managed to weaken against the dollar up until it got to this level. So immediately after getting to that level, from the forward chart, you can see the strong rejection, market attempting to bounce, getting some volatility here on Friday. And now as we enter a new week, it's attempting to move back higher. So there is a good chance we'll be seeing some positive momentum arising in the euro. And if this plays out, then the idea is to go for a buy position and target higher prices, with at least the minimum target being around 1.09516. So it's a really strong bounce. So I expect some momentum to kick in on this chart, and perhaps we see prices going all the way up to this level. So the alternative is the euro breaking down lower, breaching this trend line and moving lower, which I deem highly unlikely. So on the short run, if you are an intraday trader, we know that the target is not that far off. So in this case, if the euro happens to be really strong today, then a significant move to Friday's high of 1.08409 might be a nice target for intraday trading, whereas the market could also retest the Friday's low. So we could also see the market going back down to these levels. So it's a wait and see scenario. I don't see much volatility. So once we start seeing bigger candlesticks, then it would indicate that volatility is coming back to the markets. So as for USD JPY, a very interesting price action level. So it's currently retesting the high of the last 2 weeks. So clearly from the 1 hour candlesticks, you can see this area here has been acting as a very strong resistance. And this is around 146.537. So right now, as we speak, there is a good chance that the market could breach this level and continue moving higher, especially after comments from the Bank of Japan last week, basically saying that inflation is still within target, which basically implies that they are looking to hold the current monetary policy, and this monetary policy is weakening the Japanese yen. So in this case, I expect some form of breach. So if the market manages to breach above this level, then it's a very strong bullish signal for any JPY trader out there. So clearly, if the market breaches this level, then we'll be acting with resistances that were last experienced around this area. And this is October last year. So we could be seeing the market making a big jump and getting to the previous highs around this area here. And this is around 148.48. So there is a good chance we could be seeing a very strong acceleration in USD JPY. And this is if it breaches this high right here. Then we have USD CAD. Clearly, very strong momentum after the attempted pullback here on Friday. So the dollar is resuming strength. And as you can see, we headed back higher towards the previous high that we saw on Friday. So I would be expecting that to be a very strong target for USD CAD traders. So the previous high was around here, 1.36392. And of course, we have a key level support area that you need to be worried about, especially if you're looking to set a stop loss below this area. So 1.35711 is the support that we had on Friday, and in last week, but one, we had the same level acting as resistance. So if we manage to see a strong dollar for the day, we go back to the previous high. But then if at some point the dollar weakens, then it means that price goes back to this support level. So as for gold, we saw some really nice opportunities happening last week, especially after it bounced from this support level here. So we had 3-point support where the market was unable to form lower lows. Then the market bounced off, broke the trend line, pulled back, and then continued all the way up until we got to the 1920 price level. So on Friday, there was a big jump downwards, which was met by an immediate recovery. And this is a key signal that gold has strongly bounced from that level. And there's a good chance we could be seeing some further upside happening in gold later this week. So from the 1 hour time frame, this is how it looks like. So try and zoom. So we can already see that the strong bearish momentum was met with a very strong recovery. And now we could be seeing, yes, gold going back to retest the 1910 price level. But also within limits, if this momentum continues, then this area might be something to consider, which is around 1920. So from the price action early this morning, you can see there is a lot of candlesticks with long upper tails, which basically indicates a rejection of higher prices. So from a technical analysis perspective, then I should be more concerned about downside momentum. So yes, there's that possibility that gold could be moving further back downwards and perhaps even retest the 1910. But we already did that early in the morning. At the beginning, you can see the market opened with a gap down, closed the gap, and now has been playing around this area here. So once you get some volatility, perhaps from the New York session, then we'll be potentially testing the 1920 price level. So personally, I tend to view gold as a very bullish, especially after the strong bounce last week. So expect maybe at least a second week of gold prices recovery, following this sequence of 4 weeks decline in gold prices. So having a good week last week may have strengthened the bulls, and we could be seeing this continuing later in the week. So for AUDUSD, you can see there was a breach towards the lower side. So we were looking at a market that was finding support here. So with this bullish channel, I was expecting price to continue within these limits. But then what happened on Friday is that the market broke the trend line, retested this area and went lower. Then we went for another retest, and now we are headed lower. So in this case, the price action indicates some further bearish momentum. So when you consider the price action over the last 2 hours, you can see that the level was completely rejected. And now the key level in focus will be the low that we saw on Friday. So it's around 0.63803. So we could be seeing the price moving further back downwards, especially after erasing all the early morning gains. So as for US equity indices, we saw them on a 3-week bearish run before they reversed last week, moved up, and then back downwards after the Jackson Hole Symposium speech by Jerome Powell, which basically indicated that there's a potential that they may continue hiking interest rates, especially as a result of having a very strong US economy, as well as having a very strong labor market. So as we have seen from the economic calendar, we have 2 key data points that are coming in for the Fed. So we have the PCE inflation that will show us the level of inflation in the US. We have GDP data, which will show the strength of the US economy. And of course, we have the job market data. So all those will be determinants for the market direction this week. So I expect this momentum to continue. So another key thing to consider is that the market was basically facing this strong momentum upwards, broke the trend line and formed a channel downwards. So we've been following this channel closely. And then the market breached the upper side of the channel, went all the way up to the breaking point. This is the point at which the market broke the trend line. And once it got there, there was extreme selling and the market went right back downwards. So now we are starting a new week and the market is attempting to move higher. But now we are still very confident that the Fed may go for another rate hike, which basically implies a weaker equity market. So in this case, there's some form of likelihood that the market could drop further back downwards, but we don't know this yet. So what we know is that since the open of the market today, we haven't had any volatility. The market is just moving sideways. So it makes it easy to trade this one because all you have to do is to monitor these two areas and then wait for a break. So if there's a break towards the upper side, we go for a long buying position. If there's a break towards the lower side, then we go for a short selling position. So I think this will be the easiest trade of the day, especially if the market breaks outside with a strong momentum. So for now, I expect on the near term, the US equity indices to continue dropping, especially considering that data that is coming in is showing a potential for the Fed going for another rate hike. So if you look at the US 30 or the Dow Jones index, there was a big sell-off on Thursday. Then on Friday, it made some form of recovery. And today, what we are seeing is a very slow momentum. The candlesticks are relatively smaller compared to what we were experiencing last week. So in this case, especially considering that it's the London session and we have a bank holiday in London, then it basically shows you that there is less participation in the market and perhaps volatility will be coming in later in the day during the New York session. So US 500 are doing the same thing. So after making a strong recovery on Friday, what we are seeing today is basically a muted market, a market that is not moving anywhere. So for UK oil, you can see the strong rejections happening here. So the first one was identified around this area here. Sorry for that. So for Brent oil, we had that area here showing a rejection of lower prices. Then we had this. Remember, last week we also had the BRICS summit where they chose to add 5 more members to the BRICS economic bloc. So then on Friday, this was the most surprising one, a very strong jump all the way down, followed by a very strong bullish momentum candlestick. So clearly, these 3 signals are indicating a strong rejection of lower prices and a strong entry by buyers immediately after. So you can see the strong green candlestick after that, here the bullish momentum after that, and also the big candlestick here after that. So today the market opened with a gap upwards, closed the gap, and now we are moving further back upwards. So in this case, I expect the market to continue pushing higher. So for this week, I will be expecting some further upside momentum. So minimum target being this particular high here, around $85.4 per barrel. So if we continue seeing more upside momentum, there's a high likelihood that the market could be headed all the way up to $85.4 per barrel. So as for European equity indices, clearly they have low momentum. They have opened the week slowly. So perhaps momentum will be picking up later in the week. But for now, we are on an upswing. So I expect the market to be resuming bullish momentum this week after having a big sell-off towards the end of the week last week. So this is what we had last week. Market going up, facing a strong rejection, and then moving back downwards, then making a recovery, and now we are starting a new week, still on this swing. So perhaps some further upside momentum will surface for the day. So for the Euro 50, it was the same thing, a strong rejection here on the midweek, a sharp drop, and now we're on the path to recovery. And I believe it's the same case for the UK 100 index. So a big sell-off towards the end of the day on Friday. And now today we are seeing this channel continue. So if you check keenly, you'll notice that there's some form of a channel developing in this particular chart. And from this area here, we are seeing a strong momentum moving upwards. So perhaps there's more room for upside momentum for the UK 100 index. So let's check if you guys have any questions as we approach the end of the presentation. Morning, Joe, Mwenda, I can see Nyanchoka, Rosalind, Shafka, Evans, I'm seeing a very nice comment here. Signals sent in Telegram never work for real. I think that's why we do the education here and the analysis, so that you can narrow down to your own signal. For me personally, I've always recommended you do your own research. You understand the markets you are trading. And once you go through this analysis, you're able to narrow down on a trading opportunity rather than wait for a signal. So hello, Tom. I can see Jay's code here, Edwin, the US, we have to do Randan verse. So a good question here with Saudi, Iran, UAE set to join 2024. Sorry guys, I'm losing my power. Yeah. So with Saudi Arabia, Iran, and UAE set to join the BRICS in 2024, that clearly is a big political and economic statement. The potential exit of oil sales from the dollars remain present. From the dollars domain presents a scenario which is very murky in sight. Yes, when you look at these major oil producers, Saudi Arabia, Iran, and UAE, entering the BRICS, they're basically following the money. They know that a majority of the West has been deindustrializing. So a majority of factories have been moving from the US and the Eurozone and moving towards Asia. A lot of companies relocating their productions in China, India, among other Asian countries. So we have seen it happen with Tesla doing a majority of their production in China and India, Apple, among many other companies. So it's these companies that do a lot of manufacturing and distribution that have the highest demand for oil. So if manufacturing is moving that side, then it's within the interest of Saudi Arabia, Iran, and UAE to join that economic bloc so that they can continue selling oil to these countries. Furthermore, if you look at the West, they are basically fighting the consumption of oil through climate change policies, ESG policies that are basically promoting the use of cleaner electric vehicles, as well as companies going green. So in this case, they don't see a very big outlook for oil demand. So in that case, they're focusing their energy on where they see more demand coming from. So let's have a look at pound USD and tell us what you saw. I think I already did that. So pound USD, this is what we are seeing. Market that was moving sideways within the highlighted rectangle in yellow, made a breach here on Thursday. And then on Friday, we had a retest. So breaks downwards, retests, moving back downwards, and then up. And now you can see that in this early morning, we didn't get to this area yet, 1.26187. And now we are moving back downwards. So I expect the market to remain with this range. This being the high, 1.26187, and the low, 1.25467. So you have a bank holiday today in the UK. It's called the summer bank holiday. So in this case, a majority of the UK banks, actually all of them will be closed. And as a result, we expect low trading volume for the pound USD for the day. So I will be expecting out of sideways momentum rather than strong directional movement like the one we had last week. So expect more of a sideways momentum, slightly down, slightly up, until we have something fueling the markets. Good morning, Gitere. Hello, Francis Mwasi. I think we already checked on gold. Remember, the session will be live on YouTube right after we end, so you can always rewatch it. We have also done Euro USD, so the only unique request here is pound yen. So let's check the pound yen. So we have also looked at USD yen. So it kind of shares the same sentiment, considering the monetary policy divergence between the two economies is quite similar with what's happening with USD yen. So here, what we are seeing, we'll be starting with a bigger time frame. So for pound yen, clearly it's a huge swing between the two currencies. But on one side, we can see that there's a common theme of resistance along this path here. I would say this has been a major resistance level for pound yen. So as for support, I don't see any common theme on a larger time frame unless we zoom out. And now we start looking at this as a swing between that low and this other low that we saw recently. Yeah, now that seems like a trend line to me, connecting this previous low with this low here. And now we have this high and this high. So we have an overall understanding of the major trend in this market. So now that we know that, we also notice that there is some level of confluence here, indicating that there was some form of support just below that area. So if I was to adjust these a little bit lower, then you can see market found support, support, support. We also have other key levels like this high here was a major resistance. We also have this key level here, which was also acting as a major resistance. And now observing the shorter term movement in the market, you'll notice that there is this seemingly double top formation with a neckline right here. So I'll be trying to highlight this. So the double top was basically showing that the bullish momentum is weakening. So we have the market going up, finding resistance, going back to the neckline, and then up again. Going back to the neckline and breaching right through it. So after the breach, market goes down, goes back, retests the neckline again, goes down, and then now up. So now, as we can see, the market has rejected 184.68. Now it's headed back downwards. And of course, the immediate target now becomes the previous low. This is the low that we saw on Friday, as well as Wednesday last week. So for this particular chart, I will be highly likely considering a momentum towards the lower trend line, which represents the lowest price that we saw on Friday at 183.36. So that's it for the day. Thank you very much, guys, and I hope to see you on the next session. So remember, the sessions happen every day at 11 a.m. This is where we cover all the major news that are expected to be in the markets. And once we go through that, we do some technical analysis. If there are trading opportunities existing in the markets as at that time, then we try and look at them, and hopefully everyone goes home happy. So thank you very much, guys. See you on the next one.